With all eyes focused on Layer 2s for Ethereum, the likes of Arbitrum, Optimism, and the all-new Base network, it is easy to forget that there is a Layer 2 out there that is dedicated to a completely different blockchain. The world's largest blockchain, Bitcoin. And the project that I am talking about is called STX. Now, STX's associated crypto, STX, secured a 4,000% increase during the 2021 bull market. But I want to know, now that the coin is down 85% from its all-time highs, is it one that has the strength to get back up to those highs when liquidity re-enters the crypto space? And like usual, I have gone through STX's white paper, its websites, its founder information, its tokenomics, and the latest price analysis to save you hours of your time in your decision on whether to place your investment capital into this project. All that I ask for in return is that you hit the like button down below and subscribe to the channel if you enjoy the content. And with the intro out of the way, let's dive into the world of STX. So, starting with their mission statement, what is the mission of STX? Well, from their mission statement online, it's clear that the project has set out to build a better internet through decentralized apps. But to achieve a better internet, the project believes that the best place to build those decentralized applications is via the Bitcoin economy. As we know, Bitcoin is the most secure and most trusted blockchain in the world. So STX is asking the question, well, what if that security and trustlessness can be applied to software and decentralized applications too? A transaction is nearly impossible to reverse or change once it has settled on the Bitcoin blockchain. And as a result of that unique feature, demand for use cases surrounding Bitcoin are constantly on the increase. So to answer this new demand, STX is providing a completely new infrastructure layer, an open source layer 2 that is built on top of the Bitcoin blockchain. STX is able to leverage Bitcoin's underlying security while providing flexibility to brand new software development. But how exactly does it go about this? Unlike layer 2s that we see on Ethereum that are built into the Ethereum ecosystem, STX is actually a standalone blockchain that is then linked to Bitcoin. It also stands out from other layer 2s because it is leveraging a new consensus mechanism known as proof of transfer. In the STX ecosystem, this is also referenced as POX. And this is a consensus mechanism that is designed to maintain the state between two different protocols. Now, the mechanism by which this works is that miners in the network must bid for new STX blocks in order to receive STX block rewards. And the currency that they use to bid for each new block is Bitcoin, BTC. The bid BTC is then distributed between STX stakers, those that have committed STX coins into the network. So miners from the Bitcoin blockchain are bidding BTC, and STX stakers from the STX network are locking away STX tokens. And this mechanism makes sure that the two networks are running and connected in parallel. Through this mechanism, STX can maintain a parallel state to the Bitcoin blockchain and peg its security to Bitcoin's underlying infrastructure while allowing Bitcoin to access then the world of Web3. So DeFi, NFTs, apps, smart contracts, all of the usual stuff. So with STX providing the opportunity to develop applications, these applications built on top of the network could arguably be more decentralized than those built on competing layer 1 networks. Taking a look at STX's backstory, the idea for STX was initially started way back in 2013 when the project was founded by Muneeb Ali and Ryan Shea. After multiple years of development, the testnet was eventually launched in 2018, but the real magic of STX didn't start to happen until STX was anchored to the Bitcoin blockchain in 2020. STX, the associated cryptocurrency coin, was initially launched as BlockSTX, that was its name, back in 2019. But more interestingly, the whole launch was qualified by the SEC, the Securities and Exchange Commission. In fact, it was the first US qualified coin offering in US history. So because that happened, because the STX coin was US qualified, it's viewed as a non-security by regulators. It means that it won't have the same regulatory oversight and shadow hanging over its head that other cryptos have experienced over the last couple of years. If you're a subscriber to the channel, you'll know that I am a huge believer in narratives. It can drive altcoin prices far higher and far quicker than simple plain facts. And alongside the narrative that STX is likely viewed as a non-security by the SEC, which is a huge tick, I do think STX has a few other narratives to pull on over the next couple of years. The first of which is the Nakamoto upgrade for the network, which is set to take place in Q1 of 2024. And this is the largest update that the STX, the STX network, has experienced. The upgrade is set to take the Stacks block time from Bitcoin's 1 block every 10 minutes to 1 block every 5 seconds. Quite a leap that will improve the network's efficiency. Secondly, the Bitcoin halving is fast approaching. We're on 206 days at the moment, and STX is arguably the #1 altcoin correlated to Bitcoin's performance. And finally, the largest narrative, in my opinion, is this idea of DeFi and apps being built on the Bitcoin blockchain. We saw the explosion of ordinals earlier in the year, these digital assets that can be transferred across the Bitcoin blockchain, and the amount of excitement that that caused. I think that that could be just the tip of the iceberg of opportunities for how Bitcoin could be leveraged for other applications and use cases. But as always, for a strong investment opportunity, we need to take a closer look at the coin's tokenomics. As we've already discussed, the associated coin of the Stacks network is called STX, and it currently is valued at 47 cents. The market cap of the coin is just over $670 million, which places it in the small cap range. Now, the total supply of coins has been capped at 1.8 billion, and 77% of those have been currently released into circulation. This means that there are approximately 414 million coins left to enter supply, and this will be achieved through Stacks mining rewards. The current Stacks block reward is 1,000 STX per block. Now, this halves every 4 years, so the next time that there is a halving, it will halve to 500 STX and then again to 250 STX after another 4 years. So with 77% of the coins currently in circulation, a steady supply via mining rewards, the dilution of the coin is fairly reasonable when compared to other projects. And although the market cap is still on the higher side at the moment, it does have room to grow in the future. As we can see on the market cap chart, it reached a peak market cap of 3.73 billion during the last crypto bull run. But what about utility? What is STX used for that could drive demand? Well, as a layer 2 network built on top of Bitcoin, the STX coin is integral to the inner workings of the network. So for any smart contracts that are deployed on the Stacks network, the STX coin is required for contracts execution. And the coin also needs to be locked up by those wishing to support the network for the chance of earning BTC rewards. As adoption for the network grows, the demand for the STX coin should grow alongside it. And finally, we come to the risks. In terms of risks for the Stacks network, we need to consider competing projects, and really there are only two that I can think of that are competitors at this moment in time, and that is the Lightning Network and RSK. However, the Lightning Network and RSK have very different goals, so although they are Bitcoin layer 2s, they aren't quite direct competitors. Secondly, another risk, the performance of the STX coin has so far been very tightly correlated with the performance of the entire crypto market. So despite having really good, strong fundamentals, it still needs bullish sentiment to drive the price higher. But what are my overall thoughts on Stacks and STX? Do I think it is one to keep a very close eye on? And the answer to that is yes. I believe it is one to pay close attention to. I think that expanding the use case of Bitcoin is a brilliant idea and is something that many other projects and companies are looking to achieve. If Stacks can provide a solution to that, then I can see over time demand just increasing and increasing for the STX token. And while the STX coin hasn't got perfect tokenomics, I do think it is one of the best beta plays for Bitcoin that exists today. So if you believe in Bitcoin and are hodling BTC, buying STX as a beta play could be another option. Whenever Bitcoin is on the rise, STX is moving in unison and usually at a much quicker rate. If you've enjoyed this video and want more detailed insights on all things crypto, I would love to have you as a subscriber on my 80/20 crypto newsletter that is sent out on a weekly basis. The vision there is to provide as much value per word as possible and to onboard the next 1 million users into the world of crypto. So it would be amazing if you could be part of that journey. I'll leave a link to the newsletter down below. As always, don't put more money into a cryptocurrency than you can afford to lose. Crypto is not a get-rich-quick scheme and should be considered alongside a variety of different assets. Thanks so much for watching, and I'll see you in the next video.